Hey everyone, Scott Smith at the Smith team at Keller Williams. Wanted to share with you a quick informational video about how to tackle the battle with rising interest rates. So, if you've been living under a rock, you probably haven't heard that the interest rates have gone up significantly. From the first of the year, we've gone from 4% to 5%, and now we're hearing 6%. So that's definitely had an impact on how the market conditions are and sellers willing to accept more. We're seeing more and more price adjustments in the marketplace. So the market is definitely stabilizing, but it's still a little bit of sticker shock for those of us that might be looking to take out a new mortgage. So I thought I'd just do some quick realtor math for you and share with you some of the strategies that we're looking at. So, if we're looking at here, I'll show you my little cue card here. If we're looking at a 30-year loan at about $300,000, 4% back in January was about $1,432. 5% as interest rates went up, jumped up to about 190 bucks a month to 1610, and now you can see that we're at almost $1,800 a month for that same loan. So it's certainly having an impact for a lot of people that are out there and saying, you know what, maybe we just shouldn't buy right now. But right now is the time that you want to look at taking advantage of the market conditions. The reason for that is sellers are very nervous about that. If you have a home in the starter price range, it could be 200, 300, maybe a little bit over 300,000. There is still very, very strong demand for that, and those buyers want to get into those. So that gives you an opportunity where if you have a home in that price point, if you want to sell high, and then maybe look at something in the next price point, step it up to your next home where you're going to be there for 10, 15 years, there's definitely more opportunities with that. So what we're actually counseling our clients on is a strategy rather than paying above list price where it was really competitive in the last few months. We're actually talking to them about structuring the transaction where we can actually buy down the interest rate instead of inflating the sales price. You might have some more closing costs that go along with the mortgage. So in this example, a $300,000 mortgage, to buy down the rate from 6%, where you might be able to buy it down to 5 or even 4%, it might cost you $4,000 or $5,000, and it's certainly a cost that you weren't expecting. But you might not be paying above list price, or you might be able to negotiate some closing costs in from the seller. How we structure that transaction. So what you look at that and say, well, why would I want to buy down the interest rate? If you're going to be in that home for more than 5, 10 years, the break even, do the quick math, about 200 bucks a month to buy down from 6 to 5 or from 5 to down to 4, it might cost you $200 to $400, and you're going to make that up in a couple years. So it's a great strategy where you can actually consult with a loan officer. They'll give you the specifics to your situation, but it's a great strategy and allows you to get into that home when the market is not as competitive as it was even a few months ago. So give us a call, 651-777-3434. We can walk you through some of the strategies with that, but don't sit on the sideline. We've talked to many people that said, you know what, we're just going to wait until we get some price adjustments or interest rates come back down. Well, this is the time that you've been waiting for, and you can take advantage of the market conditions and maybe an interest rate buy down with some good advice. So reach out to us. We'd be happy to talk to you, no cost or obligation. Certainly, we've worked with many families that are looking to make a move and love to help you as well. Thanks. Have a great day. Take care.